Fintech Chatter TV. Presented by Tier 1 People. Leaders in Fintech Executive Search.
Lendi Group comprises three brands. We have the Lendi brand, the Aussie brand, and the Domain brand. And what we are is mortgage brokers. We're effectively the fifth largest retail distributor of mortgages behind the big four banks. And each of our brands has a different proposition, but ultimately it's a digitally led experience for our consumers, and we're a product-led sales business.
We're really representative of the Australian market. So Lendi's, acquisition channels are, purely online acquisition channels. We obviously do a bunch of TV sponsorships, all that sort of stuff. But when we look at our distribution of customers, it's very much representative of the Australian population. There is a misnomer. It's not just millennials. We represent really, really well in the sort of 40 to 50 age group. And I think, by volume, if we sort of look at both the Lendi and Aussie brands, we're 6 coming up on 7% of the entire mortgage market. So you get a really good distribution across that in terms of purchase transactions, refinance, construction, etc. Basically anything that you can think about in Australia as it relates to home loans, we play in that space. Yeah, the closest Big Four bank to us would be about 11% market share. So we're not there yet, but we're hot on their heels. Look, on the people side, we've been really fortunate to have grown a really solid team over the last decade. So as you said before, Lendi started in 2013. We've got around 1,000 employees in the business. And that's everything from, we're a distributed workforce around Australia and the Philippines principally. We've got head office in Sydney, offices in every major capital city, and also a big operations centre in Makati in the Philippines. In addition to that, and as Bass was describing before, we've got across all of our brands, we've got roughly 1,400 brokers operating in the Aussie brand, circa 230 stores around Australia as well. So from a people perspective, it's a reasonably large operation. By the numbers, I talked about the market share before. We settle well over $30 billion worth of loans every year. We've got about $100 billion loan book and revenues in the hundreds of millions of dollars.
It's a great question. Dave and I both worked at the same company together outside of first job, sort of out of uni. It was a large sort of distributed sales / BPO type business. It had a number of blue chip clients in Australia, and we sort of, I think we both landed there out of uni thinking this was our stopgap towards finding our careers. I think Dave was wanting to go into investment banking, and I thought I'd be a property developer out of uni. So neither of those
didn't quite work out, did it?
Yeah.
So look, we both, I think, both knew people there. It was a good way to make some money while you were sort of looking for that first foot in the door in your long-term career trajectory. And so we met there and both, were quite successful and were awarded with relatively sort of senior roles relatively quickly, and we're lucky enough to learn a lot about that business and the ins and outs of growing teams and managing teams. And we got to the point in our early 20s where we both sort of said, well, we should probably be doing this for ourselves. So I think 22, 23, we left that job and we borrowed $75,000 off our parents each. We were able to go and secure a contract with one of the large telcos, and we set up our first business in Surrey Hills, recruited 10 or 15 staff. Probably would have been an OH&S nightmare if I'm being honest.
I think we were sitting on the boxes that the chairs came in.
Yeah,
the first couple of months.
This is bootstrapping, right?
Yeah.
So we said, well, we can't afford the luxury of a chair just yet, but we gave our staff the chairs, and we had the boxes that the chairs came in, and that was our chair for the first month.
I think we managed to convince the landlord at the time. It was a commercial terrace in Surrey Hills, and we convinced the landlord at the time, I think, to let us pay the bond over instalments over the first few months. Yeah.
Now that's a fintech idea, right?
But I think even before that, I know one of the things we originally connected over was the business we met in had a very entrepreneurial spirit. But I think Bass had just moved to Sydney, and one of the things we first connected over was just that innate entrepreneurial drive that I think
Yeah.
you're referring to. Like I grew up in a reasonably sort of middle class family. Both parents were small business owners, and kind of always saw that, like, my parents wouldn't describe it like this, but like that hustle that small business owners have. I remember, you were talking about I think your t-shirt business when you were a kid. And
that's true. I skipped a step there. Yeah, first official business was in grade 6 at school, and my parents were small business owners as well. They had a garment manufacturing business, and I had a mate at school who was, could draw these amazing pictures, and we got together and we created a t-shirt company, and we were selling it to all the kids in school, and we tried to go out of that. I was pitching the local sports stores and local, at, I don't know, 11 maybe.
Yeah.
I didn't get any success there. We had more success in the playground than we did in the real world. But, I guess, as Dave said, that comes from growing up with parents as small business owners.
Yeah, there's a whole podcast here on how you dealt with failure, right? Like the Colonel Saunders story.
I actually just, like, my first business was actually like at the time I didn't describe it like this. It was a drop shipping business for computer hardware when I was about year 6 or year 7 as well. I remember actually cold calling the supplier, and I had to put my dad on the phone because I was too young to open up the account. And you learn. I think you sell a few $1,000 worth of stuff, and you just learn everything from establishing a company to how do you find customers to the operations of stock going from one location in a country to another. And I think for me that's just always been in my DNA.
Well, we had a contract with a telco, and at the time that telco would offer what was called a dealer license. So as a dealer of that telco, you were essentially authorised to sell their suite of products, and it was mainly business products. It was really bootstrapping. So Dave and I were running the teams, hiring the staff, but, negotiating agreements with the telcos, doing payroll off, at the time, spreadsheets and Excel.
Sitting in and then the day would finish and we'd sit in our little office that was not really an office. It was like a storeroom,
the stock
room. And all the orders for the day, we had a label printer, and we had all the phones stock, and the Australian Air Express guy would come at 6 o'clock, and we'd have to get everything out and ready to go for 6 o'clock.
Mobile phones all bagged and tagged and ready to go.
And then we'd start all over again the next day. But we sort of rolled from there, and one thing sort of led to another, and that industry changed up a little bit. And that business in a very short period of time was very successful. We sort of got to hundreds of thousands of dollars a month in revenue, like in sort of 6 months. It was, we paid our dads back and all that sort of stuff very, very quickly. Yep. And we were looking at what was next, and we saw this daily deals craze starting around the world. Groupon was going nuts in the US. And we sort of looked at that and went, well, we know a thing or two around sales and distribution. Like, we should have a go at this. And we sort of started unpacking the business model and realised pretty quickly that there was a couple of things that we didn't really know very well. So we didn't really know how to acquire customers online, and that was key to that business model. I had a sort of technical background, but we'd never built software before. So we sort of, we knew we had a gap there, and we sort of shifted our focus to saying, okay, who's doing this in Australia? And it's one of those serendipitous moments where at that very time, there was 3 companies that we knew were sort of in the startup phase, like literally in their first few months. None of them had launched. We cold called one of them, managed to meet the founders I think the next day. In the course of about a week, we'd effectively folded our whole business into theirs. There's a little business called Jump on it at the time, and they had just launched. They were just about to land their first, I think, $5 million investment from, they'd just been over to Chicago seeing Groupon, and Washington, DC seeing Living Social, and they managed to get an auction happening between those guys, and Living Social, I think, invested $5 million for a third of the business, and there was a put call over the rest of the business. And so we sort of folded our business in, and I think over the course of 12 months, we hired 350 people. We opened 30 or 40 markets around Australia and New Zealand, hyper-local markets around Sydney, 3 verticals. There was travel, products, experience, and just learnt more lessons than we could have ever imagined in such a short, compressed period of time. The guys ended up selling to Living Social for hundreds of millions of dollars.
Yeah.
It was one of the early Australian startup success stories, actually. Kind of coming from that bootstrap world where we'd sort of were before, picking up some new skill, like how to, like we 3 million customers in an 18-month period in terms of like the online audience, building tech and evolving tech and product, and you know, the email market, you know.
Email marketing was a big thing back then.
Yep.
You know, there's a lot of what we learned back there. While email marketing isn't as strong as it was, there's a lot of disciplines that you learn there that exist today in our business. And I think, you know, reflecting back on lessons that you learn, you know, when we looked at that first business, we were in our early 20s, and we only knew how to grow with the money we made.
Yeah.
The concept of taking on investment, venture capital, etc., was not something that we obviously knew about, but not something that we understood. And I guess the other lesson there is it was probably our first pivot. It was that moment as entrepreneurs and as our first business that you go, is it time to pivot?
Yeah.
Like, are we on the right path here? You know, do we want to be going down this path? And the answer to that was no. You know, and that was a big decision. You know, we'd invested a lot of time and effort. We had a big team. You know, we had good relationships with our team and vendors, and you know, to pack all that in and move it into a completely new different vertical wasn't an easy decision, but with the benefit of hindsight, absolutely the right decision, and helped us on the trajectory that we ultimately ended up in today. Great question.
So we came out of Living Social. The founders exited late 2011, early 2012, and again we had sort of one of those moments where we sort of had the decision to make. Do we stick around now that this is wholly owned by Living Social US, and you know there was a really good opportunity for us there, or do we kind of take our lessons and move into something else? And we kind of had the luxury of, we sort of spent 2012 really, and we got together with another guy, Marty, who's one of the other founders of Lendi, and the three of us spent 2012 basically looking at, hey, we've got all these interesting skills, we've got very, very big ambitions, where can we apply them? And we basically built what you'd probably best described as minimally viable businesses. So not a PowerPoint presentation. We actually went, hey, what are these ideas we've got? And we actually built out the actual operating business as a way to sort of test our hypotheses. And I think probably we could do a whole podcast episode on that whole year. But
we probably will at some point.
The short story is we had 3 or 4 ideas. One was in the automotive space. And there's actually a bunch of models that have come out since that sort of validated that idea. And we actually built the technology, we built the distribution. We actually had a term sheet from someone to invest in that business. But so there was sort of something there on the automotive space. There was something there on the e-commerce side. And again, similar, we took what we'd learnt in Living Social. We took our understanding of product distribution around the world, online distribution of those products, how to find trends and attach yourself to those trends and spin up brands really quickly. And there was a whole model around that. And again, we had some really prominent e-commerce entrepreneurs put a term sheet to us to invest in that business as well. And then there's a few others, but really primarily the other one was what ultimately became Lendi. And we got to sort of late 2012, and it was crystal clear that there was this massive opportunity in home loans. At the time, $300 billion worth of annual transaction volume, $1.5 trillion of outstanding loans. At the time, 13,000 mortgage brokers, but very, very fragmented.
Yeah.
Like the biggest, we talked before about our market share. The biggest market share for a retail brand at the time would have been like 2 or 3%.
Yeah.
So incredibly long tail, and everything was offline. So we kind of came from this world where, like in 2009, we were doing, at Living Social, we were doing DocuSign contracts with every customer we signed up over the phone, and these deals were happening over the phone. You then moved to the mortgage space, and you got banks wanting fax applications and physical IDs, and we just went, you put these things together, we'd seen the velocity you can drive from a really good digital process and said, there's got to be something here. And the traction we got in that business, even though the other ones we literally had term sheets for, we just said, we've got to go all in on this thing.
I think that, and there was also just, you have to be passionate about the industry. And, the automotive industry is a great industry, but we're at the wholesaling end. So when we looked at what the mortgage industry was giving our consumers, which is, path to financial freedom, owning your home, it's a great and very rewarding industry. And for me and Dave, big tick in that box, especially when you're committing as a founder to, I don't know, decades worth of, ideally, of blood, sweat and tears. You've got to feel really good about what you're doing, and you've got to love the industry that you're in. And the other industries were exciting, and there was a big prize there, but this one just felt like it was a much more rewarding, I guess, industry. Yeah.
And so was it back to sitting on the boxes of the chairs, or?
Well, it wasn't far off that. Like we were fortunate to have done quite well out of Living Social, but we saw some upside in the exit, but that was all in script. And again, lesson learned there. Maybe try and take some cash and script. But look, at the time we had personally, 6 to 9 to 12 months worth of money saved up, and we were ready to, mortgages were looking at a pretty healthy condition. But we actually went back to the CEO of the company that we met at, who we'd worked for many years prior. And we had this great pitch deck. We had proved it up. As Dave said, business in a box. We'd started acquiring customers. We got our licenses ourselves. We were bringing on customers and working out how to actually write these loans and what was the process and what was the documentation. So we're starting to get runs on the board, and we jumped on a plane and we flew over to Perth and met him where he lives, and said we got this great idea and we got this 15-page presentation, and he said, okay, let's, and we went to get the presentation out, and he said, no. He goes, I don't need to see the presentation. I know what we've worked together. I know what you guys are capable of. What's the idea? We told him the idea. He said, yep, I'm in. That was our first investment. It was about $1 million, and we thought that we would never have to raise another round again. Well, we're set, but we were really, obviously very happy with that. We set up the team in Sydney. We had a very small team. We were over in Fishburners, actually, when we first started. Little office out the back there, and away we went. Yeah. So it wasn't far off the cardboard boxes, but it was a little bit more comfortable.
But it was actually a really interesting time. Actually, just remembering at Fishburners at the time, the company that was sitting next to us was Airbnb. Yeah. And across the road was Uber, and it was like almost the cauldron of early stage startup in Australia, because there wasn't anywhere else. Like the Stone and Chalks. There was no other there wasn't even the concept of co-working spaces in Australia, and it was really interesting from you talked before about the first and last $1 million we'd ever need to raise. We've obviously gone on to raise a whole bunch of capital since then, and from everyone from high net worth to strategics and institutional investors and all that sort of stuff. But in those first few years, it was a really, really nascent industry. And I remember going through in 2014, we raised our sort of first external round, and we ended up having to find people that understood investing in like mining businesses, like small cap mining businesses on the ASX, and convincing them that investing in a tech startup was kind of similar. Like, you've got this idea and we're going to develop that idea, and then over time it'll reap rewards. And we had to sort of use that mining analogy in a lot of ways to kind of convince people to invest in these businesses, because there just wasn't really, the concept of the VC industry didn't really exist, and startups were this thing that happened in Silicon Valley. Yeah, look, that was really interesting, and we actually had a VC fund and Macquarie with almost identical term sheets in terms of quantum, terms, price, et cetera. So we genuinely had a side-by-side comparison to make. And the journey we were on at the time was we were trying really, really hard. I sort of mentioned before the old fax machine issue. But this is sort of September, so it's actually almost 9 years ago to the day. It was around September 2014. And we were still really, we had really solid traction. If I remember correctly, we were about to hit 100 mil a month of lodgements. For context, we do about 4 billion now, but about to hit about 100 mil a month when Macquarie invested. And we were really struggling to get break. We were growing fast, and by definition, it was 18 months in, and so we're growing like incredibly fast, triple-digit percentage growth rates. But we're really struggling to get banks to change their processes to become digital. So to take an application for a home loan across every single bank on our panel, you had to have a wet signature. To submit that loan, you needed to meet the customer in person. Yep. So and there's a bunch of other things. We really wanted to break through those glass ceilings. And so the approach with Macquarie was actually two things. It was an investment on one hand, but we also launched a white label product called Click Loans with Macquarie. And Click Loans was really the first digital mortgage, and we really focused on digital from first customer contact to unconditional approval. And we really said, we don't need to digitize everything. Let's try and take the pain points out of the process. And we effectively launched that with Macquarie around the middle. So their investment was, I think, September 14. We launched the product in June 15. And we got that breakthrough growth we wanted. We doubled our efficiency of our brokers. We halved our CAC, like all the things we wanted to do. And kind of going back to your question, bringing Macquarie on it wasn't just capital. It was actually helping us drive the thesis we had behind the business forward.
Yeah.
And it was really that partnership. And they've been an amazing partner since. We've gone through, the relationship's evolved well beyond where it was there. And we're now, a very good distribution partner on one hand, and they've been great investors along the way as well. But fundamentally, that decision at the time over, pure capital was, the massive strategic benefit we're going to get.
Aussie is such a great business. It's a 30-year-old business. And it has, as Dave said, 1,200 incredible brokers who are incredibly deeply rooted into their communities. Huge opportunity, but I didn't really have a digital strategy. Now, Aussie isn't really ready for pure digital now.
Yeah.
But there are more and more customers that are coming to Aussie, and we see this since we've launched the platform into the Aussie world, that are wanting both. So they want to start the journey online and finish in a retail store, start in a store and finish online. So that was the opportunity. But yeah, look, with that came 230 stores that ultimately did things 230 different ways. 500-ish mobile brokers who did things their own way, and some of these brokers have been doing things for 20 years. So the challenge is to find a uniform approach in a way that is trying to preserve the things that are great about Aussie and keep an eye to the future. And it's that sort of triangulation that has been tricky. And admittedly, some things have gone really well and better than expected, and there's others that we've had to take a second or third pass at. But, what I would say is that it's a great group of people who have decades of experience. And what we're trying to work through now is how do we future-proof the next decade for that brand, and how do we ensure that that brand doesn't end up with its own Kodak moment, which I fear it probably would have been on had there not been an eye to the future.
Yeah, and I think, building on some of those points a little bit, when, we had a really interesting 2020, I think like most people, obviously the pandemic was the main theme of the year, but Lendi was actually, and this is all in the media, so unfortunately not a scoop for you on this one, Dex, but like we were very close to an IPO in 2020. We started the year and COVID was clearly a tailwind for us, not a headwind, and our growth accelerated. And we sort of used to joke a little bit, but it's kind of true. Like our business was built for COVID. We were able to deal with customers all around the country, and when everyone else was like working out what's this digital signature thing, how does that work? And so we had this really interesting year where we, on one hand, were preparing for an IPO, and we literally we had the book basically built. We had, obviously investment banks working with us. We'd gone through the due diligence committees with our board and all that sort of stuff. And at the same time, we're working with CBA on this Aussie opportunity. I think as Bass was saying, Aussie was the original disruptor in the space, 30-year-old brand. It was actually going back to when we started the business, we genuinely had conversations with potential investors and others. They're like, surely you don't want to compete with Aussie home loans. So it was a really, really interesting sort of, again, to use this phrase I used before, sliding doors moment, where we had to kind of look at, do we go and list the Lendi business and all that comes with that? There's positives and negatives, liquidity for our early shareholders, but being a listed business, but the publicity, customer benefit, et cetera, et cetera, et cetera. Or do we kind of take advantage of this opportunity that's ahead of us, where we've built this platform that is truly market leading, and there's an opportunity to go and retrofit's probably the wrong way to describe it, but take this 30-year-old brand who's got so many things, has done so many things, best in breed, very, very trusted. I think the thing that really blew us away the most, it wasn't because we had expectations otherwise, we just didn't know what to expect, but the people in the Aussie business have just been absolutely amazing. There are some franchisees that we now call friends, brokers that we now call friends, because they're just, they're in this and they're small business owners, they're entrepreneurs themselves.
So that DNA that we talked about at the beginning of this, your parents, there's a kind of empathy connection there with...
It's uncanny.
Yeah. Well, the big sort of aha moment was that you've got, in the retail stores, in the franchise side of the business, 230 odd stores, but you've got 230 small business owners that are so motivated to make it work and so aligned in, sort of economic and financial success, and look, they care deeply about their customers. It's a different dynamic and look, all of our people do, right? All of our managers do, but it's just a different dynamic to employing a manager, for want of a better word. And so there's this massive sort of cohort of people that are small business owners within the bigger business, if that makes sense. And that for us was really interesting. And as we're tapping into that and helping support them and helping them, unlock what that next horizon looks like, we've got 230 incredibly invested participants in that journey. Physically, mentally invested,
As we thought about, when we brought the two businesses together, because while it was an acquisition of Aussie Home Loans, we've treated it like a merger of two businesses. And as we've thought about how we bring the two businesses together, not just our team, but also the brokers, we've effectively reimagined and redescribed our culture, everything from the mission to vision, mission, values and principles. And one of those principles, and we have 10 principles, but one is I am because we are. It's the old African proverb Ubuntu, and it's completely embodied in the way the franchisees operate, because we're here. It's not this sort of head office franchisee relationship. It's actually, and Bass talks about this all the time, if they're successful, we're successful. If they're struggling, we're struggling. And this whole...
It's complete symbiosis.
And I've got to say, I've worked with you guys for a few years now. I work with a lot of businesses. I meet a lot of founders. I've been doing this 25 years, and I say this to a lot of people, but Lendi's the best client I've ever worked with, and it's for that reason, right? Yeah. And it's because we've had challenges, right? Yeah. And how you respond in those challenges and those moments is, it's just level, right? There's no shift in the reaction or the emotion. And so those values that you talk about, they're lived from the top down. And there's a saying which is, an organization's culture is driven by the worst behavior the chief exec tolerates. And I see that play out, for good and bad in a lot of organizations.
Yeah, I mean, we'd like to say at times, the standard you walk by is the standard you accept, right? But if you don't have a framework, or you can't point to why that shouldn't be accepted, then that's the problem, where the problem sort of starts. So we have recently, as Dave said, launched, as we've brought the business together, a new set of values and principles. And like anything, they need to be lived and breathed and talked into existence. And these things take time, and they start to, create their own meaning within the business. But at the end of the day, without that, then people don't have that framework to operate within, right? Oh, that's a good question. Big 4 for sure. We're 5 at the moment. Look, there's a lot to do. I think we have all of the building blocks for success. We say this a lot, right? But Australians have a history of rewarding monopolies and duopolies, and we typically are comfortable in trusting with one or two variants of property portals, jobs, supermarkets, etc. When you look at mortgage distribution, and particularly third-party distribution, about 70% of every mortgage that is originated in Australia comes from a broker. We have, as Dave said, 6.5 coming up on 7% market share, but then there's this massive long tail of thousands of brokers that own fragments of that market share each. We think that there's a big opportunity to really put a stake in the ground as that beachhead brand for broking. And when customers are thinking about where do I go for a mortgage, you shouldn't have to Google what's a cheap home loan rate, my local broker. You Aussie or Lendi, you know. I think it's a bit crude, but the analogy I like to give is if you used to use Flight Centre to book your holidays, you're probably going into Aussie, and if you use Booking.com or Expedia, you're probably coming to Lendi. And
sorry for the cliches today, but like we're just getting started. Like when we sort of look at the business today, we have so much. Bass and I spent the last couple of days just looking at what are our big bets for the next couple of quarters, and how can we help the teams coalesce around some of those things. And we start to do, we've got the luxury of having all the domain knowledge of the business, and so we can sort of sit there with a whiteboard and work out size of the prize and all that sort of stuff. We have to prioritize a list of 10 things that could all be worth millions of dollars a month of revenue. Like that's like the opportunity we have is huge. And I think Bass sort of talked about where we want to go. I think it's a good problem to have. We're energized, and I think we've got a great team around us. So looking forward to seeing what this conversation holds in a decade's time.